Welcome to Wage Cucking with JMO.
Welcome to another episode of the Wage Cuck podcast with JMO. Unfortunately, we could not find a guest this week, so it'll just be me talking to you guys for maybe 40-45 minutes. I think we'll talk about the current state of crypto, current state of DeFi, current state of NFTs, and maybe we'll talk about a little something secret, something extra by the end of the episode. So welcome, thanks for tuning in, and let's get started.
Wait.
Oh.
Yeah. Hey, JMO.
Who are these guys?
Hey, what's up?
Hello.
Let's spin this on its head a little bit. Let's get some alpha out of you, I think most of the shitcoin.com audience and the Wage Cooking with JMO loyals out there, they want the JMO analysis.
Am I getting
Andreas,
on my own podcast? What is going on?
Yeah. Yes, that is exactly it. Yeah, this is now the squeezing out the alpha of JMO on Wage Cooking with JMO podcast.
Oh boy, I hope I have something for you guys.
Yes.
A lot of pressure here.
Yeah. I think it's pretty natural to start. You know, the word narrative and narratives has become like a part of the industry. Before, there's always been narratives. There's always been something that was fashionable. If it's like exchange tokens, ICOs, these kind of things. But now, like, everyone understands that there are a few narratives that are going on at the same time. And as any level investor, really, what you have to do is just identify the narrative. Don't be too late. And then I guess follow it, invest in the right things, and get out before the narrative ends. Would you say that's correct? How would you describe it?
I think that's fairly accurate. So I think crypto, especially altcoins, are very narrative driven, just because the price action sort of reflects what the community or what the people are looking at right now. So as a trader, my general thesis is to observe these narratives, and like the ideal goal would be to get in early before the narrative really catches on. And then also there's a common saying, I think people say it all the time, like sell the news, meaning once like a position becomes too crowded or too mainstream, then you want to be the first ones to exit rather than the last one holding the bag.
And
Sorry, go on, Andreas.
No, just go ahead, Blake. I was just writing down a list of things where I wonder, like, when did it start and when did it end? Blake, go ahead.
Yeah, I want to ask, obviously you don't have to give away your current alpha, but what waves have you been riding right now? Where is there anything you see that's a current narrative that you think is coming to an end, maybe?
I think there are a few right now. One being the sort of ancient Chinese coins. I think there's a current narrative for the Chinese market getting back into crypto. And then you have coins like EOS, Filecoin, basically ones with big VC funding for maybe like the 2017 to 2019 cycle that have sort of died off, that may have some legs and run up a bit. The other major one that I see people talking about is the Ethereum layer 2, specifically now the ZK rollup narrative, where there are a lot of layer 2s that are deploying using ZK rollup technology. So like from the older ones, you have stuff like Loopring, you have a bigger one would be ZK Sync in testnet right now. And then you have stuff like Immutable X and like a few others that are specifically purposed but still use the ZK technology. So I think that I think Mina is another one that has similar properties. So if the narrative is that ZK rollups are the future of Ethereum scaling, then it's never too wrong to look at a bag of various ZK rollups or coins that represent ZK technology and in fire position in a few of those.
I think I read this in there's some new DeFi newsletter I read on Substack. It's not very good, but they did have a point of recycling coins, if that makes sense, because they were making this point. Watch out for coins that are being recycled to fit a new narrative or a new cycle, because there's a lot of investors, especially VC investors, which I think are often maybe not the most intelligent investors. But so if you buy their tokens now under just being recycled, just like they're just saying, hey, we're still here, or I guess if they're recycling and so they're relaunching a failed project on a new chain, then you would become, there's so much money locked up and it's been locked up for a long time, and these people are really looking to cash out, both retail and VC.
Yeah.
Do you think think that's dangerous? And like, how would you deal with that?
Yeah, so it makes sense for the VCs that have these large positions. Basically, like the big VC funds, their strategies in the past few years are to get in early stage, the early rounds of these deals, which are mainly token based, meaning you don't necessarily get equity in the company you're investing in. And not only that, like the company that you're investing in may not be actually generating real revenue or real profit, but the token value, even if the token doesn't have a specific use case or isn't related to the, I'd say to the success or the overall profit of the company, it still has value. So then like VCs end up holding a lot of these bags of tokens of projects that have sort of, the hype has died down and they don't know what to do with. So they're obviously at some point looking for exit liquidity. So the best thing they can do is to, like you said, recycle these projects into the current market as, you know, like new hype cycles, new trading cycles, and find some exit liquidity if they can generate enough hype or enough interest in their old projects.
Wage Cucking with J-Mo.
How would we spot that and how would you avoid it? Like, for example, you mentioned EOS and Filecoin. So I'm not very familiar with EOS. I think it was supposed to be this like everything chain back in the day. Like Omisa Go probably was supposed to do everything.
Yeah.
And separately, Filecoin I think might be different because I've heard some whispers over the years in like more technical circles, like coders who actually make chains saying Filecoin actually has done something. What do you think about those two?
So specifically with EOS, EOS is a pretty dead chain. It's supposed to be I guess like multi-purpose blockchain, sort of the way that Vitalik describes Ethereum, or general use blockchain, I think is the term he uses. So like they have like a smart contract layer where you can deploy dApps. And if you look at the list of dApps that are deployed on EOS, there are quite a few, but most of them are these super scammy gambling apps based in China. EOS also did like the biggest raise, I think in 2016 ever. I think they raised something like $4 billion, and they got slapped by the SEC with a $24 million fine for selling securities. So they still profited quite a bit on that. Filecoin specifically is supposed to be a decentralized storage network. I don't know too much about the technology. From what I understand, it's supposed to compete with stuff like Amazon Web Services or, you know, general online storage applications. Basically, the token grants you a certain amount of decentralized storage where your data is encrypted yet stored over like a chain where the chain is supported by a bunch of nodes that are sort of decentralized around the world. So there isn't one central point of failure. They also raised like a ridiculous amount, I think around 2016, like I think they raised something like 170, 180 million. Although their ICO, I think, was a bit more public, although you had to KYC through, I forgot the name of the site, but there was like it's sort of like a Y Combinator site where investors can KYC and then get some sort of deal flow. But a majority of Filecoin allocations were sold to big VC funds, specifically big funds in China, I believe. So they're holding quite a bit of Filecoin right now.
So would you say that for people looking to invest, I mean, I don't know if we're in the news cycle or not, right? I mean, we are in the news cycle, but I don't know if we're in the up part. But would you say it's dangerous to get into EOS or Filecoin because even if it does great, there's just so much need for exit liquidity?
Yeah, I see it less of an investment and more of a short-term trade. If you have these positions, you're not investing or you're not buying these tokens for the long-term success of these projects. You're not banking on the fact that EOS will suddenly overtake Ethereum in terms of dApps and smart contracts and whatnot. Sort of banking on like a short-term narrative. A lot of these tokens will move in unison with each other. So if one moves, the other will move, and then you have a decent short-term trade where you can exit at a profit within, I don't know, like a few months time frame.
I had another question. Because obviously the Chinese narrative, that seems to be like, that's been so recent, right? So are you purely keeping up with these narratives mainly through Twitter, or how are you how are you keeping on top of this stuff? Like, how would you tell people to keep on top of it?
Yeah, I'm mainly following on Twitter. Are you talking specifically about like general narratives?
Yeah,
I think looking at like Twitter, like what people are saying, like basically maybe a handful of Telegram groups, like Discord groups, to see what kind of discussion is going on. I think that'll give you a general sense of where people's heads are at in terms of like what they think is going to go up, what they think is going to go down. For trading these positions specifically, I think there's a lot more that goes into it. For example, a lot of the stuff I do is just look on chain, where if you look at the big wallets, a lot of them are public, especially like the big VC funds or the big trading funds have pretty public on-chain wallets. So you can just look at the token movements, see if they're accumulating, see if they're exiting their position and stuff like that. There's also like a lot of wallets that specifically in the past have had very profitable positions. Well, I'll give you an example. Like let's say a coin gets listed on Coinbase and 24 hours later, one wallet accumulates a ton of that coin only to sell after listing. Then you can determine that maybe that person who's operating that wallet sort of knows what they're talking or what they're doing, sort of has some inside tracker, inside information. So then you can just flag that wallet and look at the token or coin movements within that wallet and base some analysis out of that. So I think that's fairly important to not rely completely on like what people are saying, because a lot of people say a lot of things. Also, there are quite a few of people LARPing or a lot of irrelevant people that aren't really big players, but for some reason have like these huge opinions that they think are true, they think are valid. So I mean, you see Twitter accounts that have like couple 100,000 people following them, where the person has literally no idea what they're talking about, but they're just spewing nonsense. So it's important to be able to filter the noise from like what's actually going on.
Nice.
Yeah, I guess usually when you find a referral link, that's a really, really bad sign.
Yeah.
I'll continue with what Blake said. So I guess this is a Chinese narrative, which is crypto is coming back to China, and if you're not there first, you're gonna miss it again.
Yeah.
But there's a second one, which is crypto is coming back to Hong Kong, and if you don't get that one, you're gonna miss that too as well. I mean, the Chinese narrative, I have absolutely no idea. This is so hard, language barrier and all the fakery.
Yeah.
So unless you can comment on that, then I'm more curious, what do you think about this, the Hong Kong narrative? I mean, there's a few people running it. Arthur has definitely been doing it.
Uh-huh.
And I think I saw something just the other day, Justin's son also, who is promoting this narrative of Hong Kong crypto hub, and how do they stand to benefits? Like what are people actually shilling? What's the alpha in that?
Well, I think it's sort of similar to basically any of the major cities or major countries that are trying to welcome crypto-related businesses into their country for tax reasons or just to increase GDP or whatever. So basically what they're saying is that like Hong Kong will be a hub for new crypto development, and there's going to be tons of stuff coming out of Hong Kong. I sort of believe it. I mean, if you look at the companies or the funds based out of Hong Kong, there are quite a few. Like I know Arthur's been there for quite a bit, right? BitMEX has an office. I don't know if they still have that office, but they have an office, like one of the bigger offices in Central, where basically it's the area of Hong Kong where you're going to pay the most in the world per rent. So they probably had one of the most expensive offices in the world there. And I don't really know what Justin's doing there, but I tend to believe Arthur, because I don't know, Arthur's been right in the past more than he's been wrong, and he's done quite a bit of business there.
And I was asking about Hong Kong because I was spending a lot of time there. I wasn't there as early as Arthur or anything during that boom, but I spent a lot of time there. And the reason I left and many others is because they became very hostile to many things. They became hostile to, in Hong Kong for one, Chinese did. But number two is it fell out of favor. Crypto fell out of favor in Hong Kong. And there was talks of crackdowns, and, they weren't going to protect the businesses that were there anymore. A lot of people moved to or established in Singapore.
Yeah.
Even Singapore, talking Dubai.
Even Singapore is like sort of cracking down. Like I think there's these constant ongoing things where cities or countries say that they're crypto friendly, and then like for example in Singapore, I know a lot of crypto companies are based out of Singapore now, but I know a lot of the crypto companies that are based out of Singapore aren't licensed or registered to even operate in Singapore. That they just have like the company there. And then also Singaporean banks are quite difficult to deal with. This is from like personal experience, and then talking with quite a few of my friends about Singaporean banks. Like I know a lot of them got their banks shut down for doing like one or two crypto transactions through pretty major exchanges. It's not like they're wiring from like these small offshore banks. They're wiring, I don't know, like a Credit Suisse or something like that's Silvergate, and they get their account shut down because they're dealing with crypto. So it's hard to say which areas are actually conductive to these new crypto companies, just because they could say one thing, they do another.
So maybe we should be shorting Singapore-based crypto exchange tokens then, if we're trying to get really macro with this.
That's Bybit though.
I don't think that's necessarily the case, because if there are crackdowns in any of these major cities where there's like a lot of crypto-based companies, they could just move to like another city. It's not like I guess if you're incorporated somewhere, it's not that difficult for you to move somewhere else or to register or be incorporated somewhere else. And a lot of these companies, even if they have offices, say in Singapore or say in Hong Kong, that they're based out of like Cayman or like Antigua or BVI or stuff like that. So it sort of allows them the freedom to sort of move around the world wherever countries allow them to operate. And then also like these companies, a lot of the day-to-day work is done online. So a lot of these people can just work remotely. So I don't think it's a huge issue if some of these like cities or countries start cracking down.
Whoa, Wage Cucking with J-Mo.
I'm just going to go down my list here, if you don't mind, Blake.
You keep going. Yeah. I've got a list too. You go through yours first.
I want to talk specifically about, my friend Ben, who's the CEO of Bybit. So Bybit has offices in Singapore, and Bybit isn't allowed to operate in Singapore. So a lot of the younger, let's say interns or lower level people that wanted to get into crypto couldn't trade on the exchange they were working for. So they were recommended FTX. So because they were based in Singapore, then they couldn't use FTX. A lot of the employees had quite a bit of balances on FTX as their main exchange. And Ben was nice enough to put together a fund within Bybit. Shout out to Ben. But he basically, I don't remember how much the amount was, but he basically helped cover at least some of the losses for his employees to a certain amount on FTX, just because he didn't want to see them starve.
Now, I don't know if you read this too, but I saw something, I believe this week or last week, about Hong Kong allowing people in Hong Kong as well to trade on exchanges and use crypto products.
Oh, really? I don't know. I don't really follow that stuff. Like I follow the Japan news a little bit for the past like few years, just because it's been interesting. So basically, in Japan, well, I guess the biggest player was FTX, and then they got shut down there. They were forced to buy an exchange. I think it was called Liquid and rebranded as like FTX Japan. But it was a really I looked at the user interface. I looked at the coins being traded. It was a really shitty version to a point where some people you and I know moved out of Japan because they couldn't trade on FTX. And there are quite a few big crypto businesses that are still based in Tokyo. So I think it's a pretty interesting dynamic as to what's going on.
A different one. We were talking about, we mentioned Arthur Hayes. He was promoting GMX pretty heavily. And for those who have been sleeping under a giant rock, it's a DEX on Arbitrum.
It's also on Avalanche.
Yeah. Okay. That's true. Do you think the GMX trade has become very crowded? Yeah. What do you think about GMX? I mean, Arthur has been promoting it a lot, and I think you have as well.
I think it's been a bit crowded, but I think GMX, the token itself, operates differently than quite a few other tokens. Its intrinsic value can be determined. So basically, the GMX token is the token for the GMX exchange, and holding the token, you get, I believe it's 30% of the net fees paid on the platform. So as long as the platform is doing quite a bit of volume, there's always going to be inherent value in the GMX token. I haven't really looked at like the dollar value analysis of the GMX token now versus the volume, or the market cap versus the volume. But I think the narrative for that is a bit different, because obviously if volume suddenly fall off on Arbitrum and no one uses Arbitrum, then I think the GMX token will crash regardless of what narrative is going on.
So it basically acts a lot more like equity in a company, because you're getting, I mean, they're not going to ever use those words, but you are getting something that smells slightly like dividends.
Yeah. I mean, you're getting a straight dividend, right? You're getting literally 30%.
I didn't call it that. GMX lawyers, I did not say that. I said you're getting a liquid staking reward, whatever.
What's the deal with that though? So don't they provide? There's some liquidity provision stuff in there, right? When they're working with dexes, or there's something going on in the back end that I don't really understand. But I know something about they were supporting with GMX were power, like behind liquidity on dexes or something like that. Am I right?
I think it's like the other way around, right? Like,
okay.
So GMX has a product called GLP, which is basically liquidity on the GMX exchange, and it operates differently than like the standard like automated market maker like something like Uniswap or Trader Joe on AVAX or QuickSwap or whatever. So instead of it being like a dual asset pool that is balanced, it's a general pool with, I want to say, like 5 or 6 assets. Like I think 3 of them are stable coins, and then you have Bitcoin, Ethereum, and then on Arbitrum you have like a few altcoins. I think Uniswap, Chainlink, and maybe there's one other one. And then on Avalanche you obviously have AVAX. So in order to deposit to the GMX pool, you need to put in like one of those assets, and the amount of GLP that you get, or percentage of the pool, is based on the current balance of all those assets in the pool versus what their target balance is. So like, for example, if they want the pool to be, let's say 30% Ethereum, and it's 32% Ethereum, if you deposit Ethereum, then you get a worse rate than if you deposit, say, a stable coin, if the stable coin balance is lower than what the Ethereum balance is. So that they issue you an actual token, the GLP token, so you have shares in GLP. And I think what's happening is, because it's sort of a volatile asset, because you're essentially, and not only is the asset, it fluctuates in price based on its underlying assets, but you're also counter trading people that are trading on GMX, meaning like if everyone is skewed heavily long, which has happened quite a bit recently, and then the price of the assets goes up, then the GLP holders suffer a bit because they're counter trading the traders themselves. So then there are quite a few DeFi protocols that are building sort of market neutral GMX vaults. Basically, they look at the long short skew of GLP, or the traders that are trading against GLP, and then they hedge those positions somewhere else. So the return may be a bit different, but you can be guaranteed like a certain sense of security, or like your GLP price will stay the same. And then there's other ones that are sort of doing the exact opposite, that are looking to take GLP and leverage counter trade. If you think that the average trader on GMX is losing, and you only have X amount of liquidity you can deposit into GLP, but you're only getting 1x leverage. Whereas there are protocols now that allow you to deposit GLP and essentially leverage counter trade against GMX traders. So you get way more rewards, but it's also like quite a bit of high risk. I think that's a sign as to when a protocol is doing well, others are developing their own platforms that are using protocol to function themselves.
I mean, that is, to me, is the coolest part of DeFi. It's what makes it really separate from CeFi, except from the risk, is that you get these like Lego building blocks, Yeah.
Kind of interesting. Like, so because everything is done on chain, and usually, like even in Uniswap, if you look at Uniswap, if you deposit, or a Curve is another example, if you deposit liquidity in the Curve or Uniswap, you're granted an Ethereum token that represents your share of the pool. So that it allows for people to build stuff using that token, which represents a share in their pool. So for example, like I think on Uniswap, the version 3, they actually issue you a token and an NFT to represent the position you're. I haven't used Uniswap liquidity in a while, but I think that's what they do now. So because the token you receive has underlying value as a share of a liquidity pool, people can build stuff that uses that token. Like, for example, you could have a market where, like something like Aave, where you can deposit, instead of depositing a single asset, you can deposit like Uniswap LP tokens and then borrow against that. So that there's a bunch of interesting stuff that you can do based on what the design is.
It was weird you just mentioned Uniswap there, because I saw today he's a co-founder of 1inch, and he wasn't using what's it called? Is it Flashbots, Andreas? Yeah, it's Flashbots, right? Where you don't get front run. He wasn't using Flashbots, and he lost 30 ETH trying to add liquidity on Uniswap, which seems like a massive faux pas for someone who's a co-founder of 1inch. I don't know how he managed to do that.
I'm pretty sure he just up if that's the case, because on Uniswap you can set your slippage tolerance, so as long as it's within this. I mean, unless like I think the standard is 0.5%, so unless it was, I don't know, like a 6,000 ETH position that he put in, then maybe he lost 30 ETH.
Did you say while adding liquidity or while performing a swap?
So he says, hey, he tweeted Hayden Adams. He said, "Hey Hayden, I just lost 30 ETH because I was front run by an MEV bot when I added liquidity to Uniswap. I think it's not just me. Any ideas or solutions?"
I don't understand.
He said added liquidity.
Yeah.
I don't understand why he's hitting up Hayden. Like, it's what is Hayden gonna do? He's like, I'll talk to Uniswap.
Well, I mean, Demo, you can explain how do you lose money adding liquidity on Uniswap V3? Are you putting the money in a pool that is in a crazy state?
Yeah. So if a pool is imbalanced, obviously, and you're depositing like a certain amount of one asset or a certain amount of another asset, and an MEV bot knows like that the transaction is executed, they can front run it and adjust the pool contents in a way where they have a profitable trade where they deposit a certain amount, and then immediately after your liquidity deposit is put in, they exit the position to skew the pool back to its previous state.
So I just read the comments, and Hayden actually replied to him, and the guy just up. He had his
that's what I assume. Yeah, I think that happens on Uniswap quite a bit because they have a standard slippage tolerance. But if you're trading shitcoins, like you can't use the same slippage tolerance as if you're trading the high liquidity coins. So maybe you're doing like a decent sized trade on like a shitcoin that's illiquid, so you put in like 5 or 10% slippage tolerance, and then you just leave it and forget about it. Then you execute another trade on the same UI. Then that would happen. So it's super likely he f***ed up because of that.
There's something to be said about price impact versus slippage. People get that wrong a lot. Mm-hmm. For an illiquid shitcoin, you can actually use a very low slippage because there's no trading, right?
Yeah.
So but on a high liquidity coin, you need a higher slippage because it's moving very fast.
Yeah.
It sounds like he got a quote that was horrid.
Yeah.
And he accepted that quote. It's almost what it sounds like. It's hard to say.
And then made it worse by going and crying on Twitter to the guy that can't do anything about it.
Did he post the transaction?
No, he didn't. He did not. But I think they spoke privately. Yeah, Hayden confirmed that he had his slippage set to 30%, which screwed him.
Okay,
That's all.
I'm going to get us back on track here. Yeah, so we discussed GMX. Another one that you've been vocal about, which I thought was very funny, is you quite vocal about Aptos.
Yeah.
I'm going to pull up the price before we talk because otherwise it's a bit confusing for me. But I think it's been quite well known that you've been holding Aptos since the sale?
Yeah. I mean,
Yeah, you've been public about that.
I didn't get in any of the VC rounds, but I bought some like right when it was released on chain.
And I think basically I saw you on Twitter, I'm sure, saying you were going to take profit on Aptos at the same time as like in literally every Telegram group I'm in, everyone's like, hey, is anybody looking at Aptos? Should I be buying Aptos?
Yeah, of course.
So as an example, I'm looking at it. It hasn't crashed at all, but many things have gone up. No, it is actually down. Okay. And if I see against Ether, how did you decide that was the time to take profit on Aptos? And was it because all these kind of people were showing up and finally talking about it? Or like, what made you decide?
Also, well, okay, it was that and a bit that the price had gone up huge amount in a market where coins weren't moving that much. It seemed like a pretty big outlier. But I was pretty bullish since day one because, again, going back to narratives, so there's this whole narrative coming out of the Move chain. So basically chains like Aptos and Sui that are developed using Move. And Aptos it seemed like the best one. It was like the first to market. If you look on chain on Aptos, like people are already using it. Like if you look at Sui, I think they announced a testnet, but then it got pushed back or that there's no firm dates and stuff like that. So there's a lot to be said about just like getting to market at the right time and developing a user base and developing a community at the right time.
Yeah, this Aptos versus Sui, I remember this happening because I was at some pretty small Ethereum conference in Paris accidentally. And it was right then. It was like Aptos, Sui, like which one, what? How did you pick one? Because you must have done this a long time ago. Or did you pick both?
I didn't really pick any because Sui isn't trading right now. It's not launched, right?
Yeah, there's no token, right?
That was pretty much just done for you.
Yeah, in a way. So
wait, there was one more, right?
I felt like people were just idiots. Like the whole thing, like you have all these Ethereum people who are like, this is just another like FTX VC project where there's like a huge valuation for locked tokens basically, and it's like released over a certain amount of time. So like before launch, it was worth maybe 5-10 billion, like somewhere around there, fully diluted if you look at like the unlocks. But then I don't know why, but no one seemed to look at the unlock schedule where the VC unlocks don't start until I want to say November of this year. So the current circulating supply, they have incentive to keep the price high up until at least November because that's when they get their first vesting batch. So it seemed kind of obvious to me that it wasn't a token that was going to be released and the price would be super high on day one and then go straight down like a lot of these other projects.
There was another one as well, right? Wasn't it Linera? I swear there were three.
There was.
Yeah. Did that even launch? No.
I have no idea. I haven't looked in that in a while.
Whoa, Wage Cucking with J-Mo.
I wanted to ask you as well because you mentioned this on the last episode, so you guys should check out the last one, which was with Arjun from Mantle. But you were speaking about airdrops and how they were doing things a little bit differently. Do you think the airdrop narrative, because you see so many people on Twitter trying to farm airdrops, do you think that's a pointless thing to be spending your time on, or is it something people should actually be trying to do?
That's a good question. Like, if you care about the small amount of money you get on, like, I don't farm airdrops at all. Like I've used like ZK Sync. I use Arbitrum. I guess with ZK Sync it's a bit different. I just wanted to test out, like, see what it was like. But for Arbitrum, like I wouldn't use it if there weren't legitimate platforms to use on Arbitrum. So like for me, I don't really bother. But I don't know, like if you only have like a certain amount of crypto it's not that cost inefficient to just move some coins to bridge to another chain, just like mess around with the DEX, make some minor swaps and stuff like that, and sort of hope that they airdrop you. But I just think what I discussed there was I just think the model is like super stupid, because why would you airdrop tokens to these people that are just hunting for airdrops? You'd rather give the native token to whatever chain you're launching to people who want to use your chain long term. And like I'd say a large majority of the people that qualify for airdrops are sort of civil attacking these airdrops, basically making a bunch of wallets, doing the same repeated set of transactions across all wallets, and hoping that there's some minimum requirement per wallet where each of their wallets qualifies for an airdrop. And I just think, like, if you're a project looking to launch, the current airdrop model to just give these people tokens is super dumb.
Yeah. It just seems a bit broken.
There's a few other ones. We don't have time to do them completely in this one, but I mean, I know you like games in general, so I assume you're hoping really for GameFi to happen. 100%. So I don't follow it closely. To me, it feels like absolutely nothing is happening. You're the expert. What do you think?
I wouldn't say absolutely nothing is happening. There are quite a few games that have gained like a reasonable amount of traction. I think the biggest problem right now is with the games get traction. It sort of means basically all the games on chain right now, their selling point is like through NFTs or through like in-game tradable items. So if a game takes off and has a lot of users, then the barrier to entry for like your average gamer is way too high. Like some of these games that have like hundreds of thousands of users, in order to like even play at a reasonable level, you need to invest like between, I would say, like $2,000 and $10,000, and that's just way too much for your average gamer. So it's like a sort of double-edged sword right now, where there aren't like big games that have gained traction where it's just you pay a one-time fee. They're mostly either play to earn or some sort of profitability tied with it, with either like owning the in-game NFTs or owning the in-game tokens, the in-game currency or whatever. The other thing I'd like to see is like actual good games that are able to compete with the bigger games produced by, say, like Valve or Blizzard, Activision and stuff like that, which it's sort of, so like the one thing I think gaming projects have going for them is, I'd say like 99% of the big game developers right now, because of their like rigid corporate structure, they're publicly traded, stuff like that, they're never going to dabble in this blockchain gaming stuff. They're never going to have stuff like a market where people can transact for hundreds, thousands, millions of dollars or worth of in-game assets, because it's too much risks for them and they're not like experienced. It's not their niche, right? So
maybe we'll see smaller companies.
I think that's what we're seeing right now, mostly indie companies. But the problem with that is that the games that they develop aren't really competitive with the major games, because they don't have the best game developers. They don't have the budget of like these literally billion-dollar companies that they're competing with.
I'm going to end it with my questions. I have loads more written down, but I think I'm going to, I mean, some of these are like entire episodes, some of these questions. Yeah, we could more or less, if we listed some project, we could pretty much make an episode just about GameFi.
Yeah, for sure.
But I'm going to cut it short with my questions, so we can do another one.
Mm-hmm.
I think, let's save them. I've got more to dive into, but I don't want to have you guys sat here for another 45 minutes. So yeah, I guess we'll call it a day there.
I had a whole podcast plan to do myself, but you guys interrupted me and ruined it. So.
Well, we'll have to do that one another time as well then. It's still your podcast. It's still your podcast. You can do your outro.
I'm uncut for my podcast now.
Yes.